20 million different professionals. That's the scope of the market that Axial works with. Now, if you look at Crunchbase, and this is a rough proxy, it's not totally complete, but Crunchbase has about 200,000 different companies that have been listed and reported in their database. So even if that underreports the technology startup economy and ecosystem, you can tell that the ratio of 27 million to 200,000 is pretty striking. By all accounts, the ecosystem for operating companies, private companies, family-owned businesses looks to be about 200 times larger than the ecosystem and economies for technology startups, primarily in Boston, New York, and Palo Alto. So we're addressing a very, very large market at Axial. Our goal is to help connect all of these constituents, the members of the entrepreneurial economy. So who are those members? They are four primary cohorts. The first are the people that run all of these private businesses. So the CEOs and CFOs and COOs, the heads of those 6 million enterprises and institutions. Then there are three other categories that support those entrepreneurs. And those are folks that invest, acquire, and finance or advise all of those private companies. Broadly defined, that is what we call the entrepreneurial economy. It's bringing together folks that you may be familiar with from the private equity industry, from the investment banking community, from the accounting and legal professions. All of those constituents are supporters and service providers and members of the entrepreneurial economy. So what we do at Axial is we work to connect all of those professionals to enable them to do more business, to close more transactions, and to create commercial opportunity for themselves. What that means in practice is that Axial is a part of a broad range of companies like AngelList, even at its earliest stages, maybe like Indiegogo or Kickstarter. But it's a platform and a networking platform and a series of software and technology tools that help connect all of these members, primarily at first to access capital and to access the capital markets. So what we're working on, and our large mission, is to help private CEOs and private companies first access the capital that they require to grow their business, to give them options as they pursue their growth strategies. Those options may include getting a loan. Those options may include seeking a minority investor. Those options may include selling their company outright to another company, to a private equity firm, or to a high net worth individual. It could be anybody. So that's the first thing that Axial helps do. We help connect private companies and their advisors to sources of capital through networking technology. So that's what we're working on, that's what we're doing. Why is that interesting? It's interesting because it creates many more options and potentials for people to both start and exit private businesses that have ever existed in the past. In the past, if you talk to operators of privately owned businesses, if you talk to CEOs, they're often constrained and mystified. They're daunted by the prospects of entering the capital markets. If you've ever talked to anybody that's led a financing round for a startup, all the way to selling their company in an M&A transaction, the process of entering the capital markets is incredibly daunting. Most CEOs, most operators spend their time operating their business. They don't spend their time making pitch decks, pursuing potential acquirers, meeting with investors. Most of their energies and efforts are concentrated around running their business every day. This is particularly true for family-owned businesses and for private businesses that we wouldn't consider part of the technology community that some of us are a part of here in New York and in Boston and Palo Alto. So for early stage entrepreneurs and folks like Mark Zuckerberg, he's probably more used to meeting with investors and leading financing rounds. But if you're running a specialty chemical manufacturer based in Cleveland, Ohio, you've been doing it for 20 years. You spend all of your time working with your customers, improving your manufacturing facilities, meeting with potential customers, meeting with suppliers. The idea of selling your company can seem incredibly difficult, and you're often beholden to the set of relationships and the access to those relationships that may have evolved over whatever time you've been running that company. What we do at Axial is we help create new optionality for that business owner so that they can connect to investment bankers, brokers, and people that can help them navigate a difficult transaction, and to connect to the capital providers that can secure the capital and help them ensure their growth strategies. That means in practice helping that specialty chemical manufacturer from Cleveland sell their business to a private equity firm that they may not have known existed beforehand. It may help them understand that somewhere in the world there's a family office that's willing to invest $20 million to help them buy or purchase a new manufacturing facility so that they can reach their growth objectives. And that family office will work outside of the banking system, outside of the private equity industry, and can provide terms that no private equity fund, no mezzanine lender, or no commercial bank could ever provide. So there are, in the world right now, thousands and thousands and thousands of different sources of capital, investors, people that are willing to participate in the private economy, the economy and the entrepreneurial economy for private companies. And again, it ranges on the large end from private equity firms and funds, strategic acquirers, Fortune 1000 companies, all the way down to high net worth individuals, angel investors, folks that may not want to take on the risk of the next Instagram, but are willing to invest in private companies that need capital to grow or to access their growth strategies. So that's what we do. We help connect all of those constituents, the advisors to companies, that includes accountants and lawyers, investment bankers, and any kind of service provider, the capital, and then the companies themselves. It's a very big idea, and it's a big mission. And again, one of the reasons why it's so interesting is because if you are thinking about considering a career in entrepreneurship, you will now know that through resources and platforms like Axial, there are more capabilities and more points through which you can access the capital markets. So you can start a company that may be lower growth. You may be able to start a company that doesn't need to turn into Instagram in order for yourself to have some kind of exit strategy, for yourself to have some kind of liquidity optionality, right? If you know that there's a network of thousands and thousands of different firms that are bidding on the right to give you capital, that gives you assurance that if you start a company that is renting out vacation homes on the Jersey Shore and you can accumulate some kind of momentum from a revenue perspective, you don't need to make it a grand slam home run from an ROI perspective in order to have some kind of way out of that business. Right now, many private businesses and business owners feel trapped by their inability to access the capital markets, and that is something that we're working on every day. So that's bullet point number one. What is Axial? And I can talk more about it, of course. I can talk about it for a long time. But if you think about where we are, we're a company that's just on 4 years old. We're 60 people here in New York. We are hiring. And we are only a network of 15,000. And if you think about those numbers that I just articulated, there are 27 million private companies just in the U.S., probably about 50 million to 60 million all over the world. There are 120 million people employed by those private companies, those 6 million that have employees. So if you think that that is our potential addressable market, we only have a network of 15,000, you can see that there's a long way to go. And yet we're seeing incredible traction, incredible momentum. So talk to me after if you're interested in hearing more. You can find us on the web at axial.net, axial.net. If you're interested in a job, /careers. If you're interested in learning more, you can email me, sam.jacobs@axial.net. So bullet point number two in my remarks is just how do companies like Axial and how are they changing the landscape for private companies around the world and for private businesses? And what's happening such that we exist? Why do we have a mandate to exist? So they're nothing particularly revelatory, simply the fact that technology, the internet, networked technology specifically, are going to eventually change every industry that they haven't already touched. And the private equity industry and the ecosystem of private companies around the world is no different. So what we see, and I'm sure what you see, is that more and more private companies and private businesses are taking their business online. The first wave of businesses that created tools, perhaps it's not the first, but it's the most recent, and it's one that has a lot of success and traction, as you guys are probably familiar with, are companies that offer marketing services and lead generation services to small businesses. So I'm thinking about everything from Yelp to Yodel to ZocDoc to Yext. All of these companies, and perhaps the biggest one, right, which is Google and Google AdWords. But through technology, small companies and private companies have taken their marketing and their business development activities online. And they're using platforms that sit on top of networks to attract new customers? Well, we are part of a solution that is also taking a wave of financing opportunities and optionality onto the internet in a similar manner for private companies. The other big networking companies I'm sure we're all familiar with, Facebook, LinkedIn. LinkedIn, their mission is to create commercial opportunity for every professional. Axial's mission and vision is to create commercial opportunity for every member of the entrepreneurial economy. So we represent just one more wave of options, workflows, tools, and industries that are moving online, that are becoming networked. And the implications of those shifts are obviously massive and hard to overstate. The first implication, and this is what we'll talk about in my next bullet point, is what does it mean if you're interested in a career in finance? And this is the Next Generation Finance Initiative. So I imagine some of you are interested perhaps in working at investment banks out of school here in town, getting that 2-year analyst position at a Morgan Stanley or a Goldman Sachs, and understanding what is going to be your role in this new world order where more and more business is taken online. I think you're used to it, but as with anything, as more information goes online and as networks go online, as LinkedIn goes from, when I was just reviewing their growth last night and reading their financial statements, as they've gone from 30,000 users to 200 million users, what happens? Well, there's a couple pretty big seismic shifts that happen. One of the big things that happens is disintermediation happens, right? So let me just read you a quote. Do you guys follow Vinod Khosla on Twitter? Anybody? Check him out. Very famous investor and entrepreneur from Silicon Valley. So he was referencing an article in The Economist. Tyler Cowen at George Mason University recently said, the population will soon be divided into 2 groups, those who are good at working with intelligent machines and those who can be replaced by them. The former will prosper, the latter will play a lot of video games. So I think that we all understand that disintermediation is a very real manifestation of the significance and the result of a lot of these technologies and networks moving online. What that means, again, is that relationships will become more commoditized. And in the old days of private equity, in the old days of the capital markets, your role as an intermediary, as a service provider, as an expert, as an investment banker at Goldman Sachs, your role partially was to have access to information that your clients didn't have and relationships that your clients didn't have. Well, one of the big manifestations and one of the big impacts of the networked world coming into play is that more and more that information asymmetry will erode and will disintegrate. Private companies will have access to the same information that an investment banker at Goldman Sachs has. Right? Bloomberg was the start of this many years ago. Now, many people understand the prices for bonds, not just a few select traders. Well, these changes will only accelerate. And again, platforms and networks like Axial, and there are others, again, Kickstarter, AngelList, all the way up to larger platforms, LinkedIn being the most prominent example. All of those will eventually commoditize both information and relationships. And what that means is that if you're a knowledge worker in the information economy of tomorrow, it's not going to be enough that you have access to information or relationships. Now, they're still valuable, and they're still valuable right now. I don't know if you've ever tried raising a fund or raising money for a startup, but obviously access to those venture capitalists, access to those angel investors, those relationships are still worth a great deal. Nevertheless, they will be worth less and less over the years. And the reason is because information technology and network platforms will enable all people with sufficient skills to be able to access those same relationships. So again, my last point, as you see private companies going online, as you see those 6 million businesses taking more and more of their business online and taking more and more of their access to the capital markets online, we will be there to serve them. Other companies will be there to serve them. And just in the way that you think about Zillow, right, a company where you can go online as a consumer and type in a few pieces of information and understand a lot more about the value of your home. Every business owner will be able to go online, type in a a few pieces of information, understand the worth of their company, but not just the worth of their company, the potential buyers, investors, and service providers for that company that they can access, and not abstractly, not after a couple of weeks of due diligence, but instantly and immediately. And again, that is what is exciting, but also scary for the finance professional of tomorrow, because again, and you may know this or you may not, but right now, finance professionals trade to a great degree, and especially in private equity, they trade on their access to relationships, they trade on information asymmetry, they trade on the disconnect between what they know about a specific market and what their potential customer, the company that they're going to buy, might know. The most obvious example is their interest in buying low and selling high. Right? So who here knows what proprietary deal flow means as it relates to the private equity industry? Well, this is a phrase that you'll learn more about. Proprietary deal flow means that it's typically a non-intermediated process. That means the company is not being represented by an investment banker. It means that a friend called a private equity professional and said, hey, this company might be for sale. And the private equity professional then takes it upon themselves to reach out to that company and offer to buy them. There's no investment banker. There's not a traditional process. That deal flow meaning the flow of companies to investors, is known as proprietary. You know, why do private equity firms like proprietary deal flow so much? Typically, and this may be a bit of an exaggeration, but not much, it's because they can pay less for those companies. Because in that sense, if the company owner does not have a trusted advisor and doesn't have somebody helping them navigate that transaction, then that means they don't know what they're really worth. And that means that the private equity industry, to a large extent, is trying to profit from and arbitrage the difference between what a company might be worth and what they're offering. And so that's why private equity professionals like and seek out proprietary deal flow, because they can, as the saying goes, buy low and sell high. So that's going to go away, and that's one of the things that we're talking about right now. That's one of the implications of connecting the entrepreneurial economy. There will be less and less proprietary deal flow, because every business owner will have instant access to tools and technologies that can help them understand the true value of their business. That's very exciting for entrepreneurs. That's very exciting for the advisors to those entrepreneurs, and it's probably a bit less exciting for private equity professionals and for the finance professional of tomorrow. And that is because, again, remember this quote, two groups of folks, two groups of people, those who are good at working with intelligent machines and those who will be replaced by them. The job of a finance professional tomorrow will be less about arbitraging opaque markets and opaque information, and will be more about using and becoming the power user of technologies and tools that are already available. Companies like Axial, tools like a Capital IQ or a PitchBook, tools and technologies that help you provide service to your client, and also help you provide creative solutions to your client. The act of accessing the information, the act of having the relationship will no longer be something that intermediaries and finance professionals are paid for, or they will be paid less for them. And that is because those relationships and information will be more readily available. As a consequence, if you want to be an investment banker, if you want to go work at Morgan Stanley, if you want to go work in any part of the finance industry, you're going to have to develop specialized expertise that involves the ability to manipulate and work and cohabitate with intelligent machines. You need to be the operator and the power user of the technology tools of tomorrow. I think most people in this room probably understand that, and it bears repeating. So, why don't I stop there, and if there are any questions, we can talk about them, or comments or remarks.
Get started, and like how to get on the traditional routes, whether they come online. I don't know how
Sure. Did anybody hear that question? How do companies like ours get started? The short answer is brute force. And what that means in practice is, her point was, how do you take an older demographic of investment bankers, private equity professionals, and other finance professionals that already recognize that we have the potential and that technology has a potential to disintermediate them, and how do you get them to participate in a network to technology ecosystem, some of which may accelerate their own demise. It's the same way that brokers use Craigslist, real estate brokers, or they may use Zillow. How do you get them to participate? The first thing is that you have to make the technology and the tools about relationships. You have to use it, and our value proposition is about helping all of these members create commercial opportunity, close more deals, and do more business. So we are not explicitly trying to disintermediate anybody. In fact, we try to route each relationship to its most likely partner. But what we found is that networks have to be about relationships first and foremost, so that people trust that they're not aggressively trying to replace their livelihoods. The other key critical part of any B2B business is that you have to understand that B2B businesses are sold, not bought. And what I mean by that is they require massive amounts of capital and they require large teams. B2B businesses and firms sometimes that we've competed with, and again, if you don't, I'm assuming you know, but business to business versus business to consumer. In the business to consumer world, in the B2C world, your largest team is of course the product team and the engineering teams, and then you have a marketing team who is looking at user behavior, looking at customer acquisition through different sorts of channels, and trying to understand how after you've put up this website or launched this mobile app, how you're going to get viral customer acquisition to get more and more people to use your thing. That's not how, essentially, the long story short is you put it up and you hope that people use it. In the B2B world, that's not how businesses work, or at least that's not been my experience. So in our world, we have to hire a sales team. That's why I'm here. I run a sales team of 40 people at a company that's not profitable. So that gives you a sense for the kinds of resources and investment that you need in order to build a scalable and sizable B2B business. It's even more pronounced in the SMB universe. So if you guys are familiar with companies like Yodel, like Yelp, I believe Yelp still isn't profitable. That's because those companies, Yelp, Yodel, ZocDoc, Yext, none of them are profitable. Require Groupon, being another example, require massive sales teams. They require massive, almost trading floor-like sales teams of young 20 and 30-something professionals that are calling on thousands and thousands of small business owners every single day. It's very hard to make that business profitable, but all of them understand and recognize that to get a group and a cohort of people that aren't used to using technology in quite the same way that some of us are, get them to embrace and adopt technology requires whacking them over the head multiple times with multiple phone calls, multiple emails, multiple meetings, and doing it repeatedly so that you can hear no 12 times, but hear yes on the 13th. So I don't know if that answers your question, but I can tell you that my sales team makes 3,000 calls into the private equity industry and the investment banking industry every single week. And what we're doing is telling people that are still using Internet Explorer 6 that besides they need to download Chrome, they need to use network technology. The challenge that we face at Axial is the challenge that, for example, Match.com faced in their early days, where, as Groucho Marx said, I wouldn't want to join any club that would have me as a member, and you wouldn't want to go online and use Match.com to date because you'd assume that the only people using Match.com were people that weren't attractive and couldn't find a mate some other way. But what did Match.com do? It just stuck around and it continued to show proof points, and it continued to trust that technology and the ease of use of technology and the potential of technology would create more options than the cost and the potential risks of, which quite simply is adverse selection. So right now we work with business owners, investors, and companies, and advisors to companies. All of them say, I don't need an online network to run my business or to access the capital markets because I've been able to do so in the past. And what we show them is that what they understood is something that was working okay could work much, much better with the proper implementation and use of technology. But again, unlike Instagram, we're 4 years old, we're not 1 year old, and it takes time. It takes time to train people how to use the tools, and it takes time to get them to embrace what is essentially a philosophical sea change in how private markets interact.
Do you have tier membership?
We We do. So we have a free service. It's a freemium model essentially, and then we have our business is a SaaS business. SaaS software as a service. We sell subscriptions, and those subscriptions are based on essentially, a good metaphor for it is like Google AdWords. So advertisers use our tools. In this case, the advertisers are the people that are seeking leads. Those leads are companies that are looking for investment, companies that are looking for investment banking advice or representation. So service providers, of which I would include private equity investors, buy our tools to market themselves, market their credibility and expertise, and ultimately to make more connections and to use Axial as a business development platform.
The scenario that some students, very entrepreneurial, they create their own, started their own corporation, like Facebook, finance field, how they help to grow a corporation. This is the general process that we go through to help them find partners and customers.
Sure, it's very easy. First, you can email me, so sam.jacobs@axial.net, but you can also just go to our website. And again, our whole existence is to make this process very easy. So what you do is you become a member of Axial. Membership is free. You build out a profile of your company or your potential investment. We make a series of recommendations on potential partners, capital providers and investors, and other folks that we think may be of interest, and then you're free to connect with them. And again, what we encourage, both because it's our business model, but also because we believe that's how deals get done, is that you really connect. You use the information and the tools. We're not, the other sea change that I should mention is the change from networks to from databases to networks. So if you're familiar with the investment banking industry, about 10 years ago, there was a company called Capital IQ, which was started by a bunch of people that I know pretty well. And that's a database. It was the first large, easily accessible database of primarily private company information that had been created for investment bankers in the way that it was created. And that represented the first big change. People pay anywhere from $25,000 a year for Capital IQ licenses all the way up to $1 million, depending on how many users you have. But databases are by definition backwards looking. Most people, I don't know that I'm in your database if you use some kind of CRM system or if you have an Excel spreadsheet with my name on it. I don't know that. I do know that I'm on LinkedIn, and I do manage my own LinkedIn profile, and that's the difference between a network and a database. And so we see, and I see, a major shift from databases to networks, with the difference being that networks are much more about instant communication because you can trust the quality and the accuracy of the information because it's user-generated.
So is it important to create this data side for business to business?
Yes, it's exactly like that.
Looking at the future, you're creating finance professionals and what they should be looking for doing from a certain aspect of what they were creating. So you're really like so what would you recommend for
Sure. I would make a list of software systems that are becoming prevalent. I would, if you wanted me to give everyone in your class a membership to Axial, I'd be happy to do that. I think Axial is one place to start. It's not the only place to start. I think everybody, if you're going to be in finance, you should have a Bloomberg terminal. You should have a Capital IQ license. There are competitors, folks like PitchBook, that are competitors to Capital IQ. And there are also a number of emerging kind of crowdfunding platforms. There's again, sorry for all the asides. This isn't exactly a prepared speech, but something else that's happened recently, which is very important, is that the SEC formally lifted the ban on general solicitation. Do you guys know what that? Raise your hand if you know what I'm talking about. Basically, in the past, to protect the individual investors out there in America who didn't know what they were doing, who were prohibited from generally advertising or soliciting individual investors about sale of specific securities, because those investors might not be sophisticated enough to understand what you were pitching them, and maybe you were being misleading or duplicitous in some way. So that the fact of there being a ban on general solicitation was a depressant, for example, in the value of my company on Axial, because to the extent that you thought that Axial was a platform for marketing companies looking for capital, that could be construed as the solicitation of investors around the sale of private securities. Well, again, not to get too technical, but that ban's been lifted. The point is that you're going to see more and more companies that are going to be taking advantage of the fact that there is no ban on general solicitation, and they're going to be able to advertise and market the fact that they're seeking capital for sale. This makes a lot of people pretty nervous because it means that companies of questionable repute and questionable credit credentials may now be seeking capital. The positive of that is that it opens up the funding environment and the funding universe to much more than just the venture capital community. Again, there's two sides to the story. So the other side to the story would be that the venture capital community is a set of professional investors, and they have experience dealing with the risk of investing in venture-driven companies and venture-oriented growth stories. And for individual investors that don't understand those risks, they might have to learn them by losing a lot of money. That being said, I would specifically have your team or your students understand what's happening around the funding universe and understanding specific solutions. And again, there's just a bunch of different companies, Kickstarter for X, that are emerging, both on the sort of early stage philanthropic crowdfunding side, and then there are companies like Axial, and I would just have them be members of those sites to the extent that they're free, get good at using them and understanding them, and that will be a big differentiator for them. If they can go into, and again, lots of companies have a vested interest, obviously. Capital IQ gives away a bunch of licenses to colleges because they want you to come in, know how to use Capital IQ instead of FactSet or some competing service. If you're already trained on their solution, then they're going to sell more seats. And that's my interest too, to be honest. So we'd be happy to give free memberships to anybody, here or in general. But the specific tactical proposal, I would say, is just make sure you know the tools or technologies that are out there. So your question was, what can I tell the companies? You can tell them to come to Axial. If they're a consumer company, there's a platform called Circle Up, which is, again, some of the issues around some of these new crowdfunding platforms are that they are highly curatorial, which means you have to qualify. In fact, AngelList was pretty buttoned down for a long time. Made it hard to democratize the process to the extent that they sort of seem to conflict with their mission statements. Nevertheless, I would send them to Axial, and I would send them to all of the different crowdfunding platforms that are out there as a means of just accessing capital and relationships. So our website is axial.net. I'm on Twitter at SamFJacobs. And if you have any questions, shoot me an email. And thank you very much for your time.